So this is your teacher Haris Bhatt, and today we are going to solve paper 1 MCQs paper for AS accounting. So we are going to solve AS accounting multiple choice paper February March, which has come in February March 2024 970612 February March 24. 1 hour paper is there. So let's start doing it. The first MCQs: which statement about sole trader is correct? Which statement about sole trader is correct? They always trade by buying and selling goods. They do not employ any staff. They keep all their profit themselves. They maintain a retained earning account. So the answer is C. They keep all their profit themselves. So all the profit will be for the sole trader because there is one man control. So he is the only person who is liable or who is entitled for the profit. Which source of finance would be available to a public limited company, but not to a partnership? Bank overdraft, debenture, leasing, trade credit. So that is debenture. Debenture is an acknowledgement of a debt, right? By the individual towards, by the company towards an individual, that we will make the payment of debenture along with interest. Which item will be debited to accounts in the purchase ledger? Means that which item is going to be debited in the trade payable account? Very easy. That is going to be purchase, return, and payment to supplier. So 2 and 4 is the answer. So D is the answer. Payment to supplier will come on the debit side of the control account of purchase ledger, you may say, and purchase return will also come on the debit side. So 2 and 4 will be the answer. 4, Tom bought goods costing $100 on credit from Sam. He returned goods costing $20 as faulty. He deducted a cash discount and paid $76 by check in full settlement. Which amounts were recorded in Tom's books of prime entry? So Tom bought goods costing $100 on credit from Sam. He returned costing $20 as faulty. He deducted a cash discount and paid 76 by check in full settlement. So 20 will be return ho gaya, to jo amount which have been Tom has bought is going to be 80, and then he deducted cash discount and paid 76. So 4 will be the cash discount. So which amount was recorded in Tom's books of prime entry? Purchase journal, we will write 80. Purchase return journal, purchase journal, we will write 100. Purchase return journal, we will write 20. And 3-column cash book, we will write 76. So C is going to be the answer. No. 3-column cash book, bank column, my dear, not the discount column, that is 76. So C is the answer, not D. C is going to be the answer because in purchase journal, you will write 100 and in purchase return journal, you will write 20 and payment which you have made through bank is 76. What are the characteristics of non-current assets? They are not intended for resale. True. They provide future economic benefit. True. They prevent the company from going out of business. So A is the answer. 1 and 2 only. They prevent company going out of business. They provide future economic benefit and they are not intended for sale. C will not, 3 will not come in that. At the beginning of the financial year, on 1st January, a business acquired a new motor vehicle for 34,000. In error, this was recorded in the accounts of motor expense. Motor vehicles are depreciated using reducing balance method at the rate of 30% per annum. It is estimated that the motor vehicle will have a residual value of 4,000 at the end of its life. So because it's a reducing balance method, so the residual value won't affect us at all. If the error is not corrected, what will be the effect on the profit for the year ended 31st December? So we are not going for the correction of error. What we'll do, we'll charge depreciation. We will charge depreciation on 34,000 by reducing balance method, 10,200. And because of that, if the error is not corrected, you have charged depreciation. So profit is going to be, it should be understated, I believe. Okay, we have recorded in the motor expense actually. So we have recorded the whole 34,000 in the motor expense rather than only depreciation, right? So 34,000 minus 10,200. So with that amount, your profit will be understated because you have to charge depreciation, which is 10,200. Means that you have to record in expenses 10,200. But you have recorded in expenses 34,000, the full amount. So 23,800 by 23,800, your profit will be understated. 34,000 minus 10,800, because you have recorded 34,000 as motor expense in expenses in the income statement. So because of that, you have reduced the profit by 34,000, and rather you should have reduced the profit by 10,200 only. So profit will be understated by 23,800. A company purchased a machine on 1st April for 25,000. It was depreciated at the rate of 20% per annum using straight line method. A full year depreciation is charged in the year of purchase, but none in the year of sale. On 30th June, the machine was sold for 12,500. The company year end is 31st December. What was the profit or loss on disposal? So the financial year is normal financial year. You will charge depreciation 20% on in 2021, then in 2022, and that's it. So 15,000 will be the net book value, and you have sold it for 12,500. So 2,500, there is going to be a loss of 2,500. So C is going to be the answer. 25,000 into 20%, 5,000 is going to be the depreciation. For 2 years, it will be 10,000, 15,000 is the net book value. If you compare it with 12,500, 2,500 loss you have to suffer. Which error would cause the trial balance not to balance? An invoice entered as a credit note on original input, a journal entry that does not balance, a transaction entered as the wrong amount on original amount, a transaction not entered in the books of account. Yes, please. So the answer will be B, a journal entry that does not balance, because if the two sides are equal, whatever the error may be, whatever be the error, the trial balance will still be equal. So the journal entry that does not balance will include a suspense. It means that the trial balance is not equal. A business prepared a trial balance that included a suspense account. Draft financial statement were prepared which showed a profit for the year of 85,000. The following errors were then discovered. Discount allowed of 1,000 had been debited to discount received account. So what we will do, discount received credit, discount allowed will be debited, because instead of debiting discount allowed, you have debited discount received. So the rectifying entry will be discount allowed to discount received. Motor expenses of 4,000 have been debited to purchases account. Again, purchases will be credited and motor expense is going to be debited. So motor expense to purchases. This will cancel out the effect actually. One also, discount allowed to discount received. Expense is increasing, income is increasing, motor expense to purchases. Expense is increasing, expense is decreasing. A payment for purchases of 5,000 had been incorrectly entered in the cash book, but credited to drawings account. Correctly entered in the cash book, but credited to drawings account, right? So instead of debiting purchases, you have credited drawings. Now drawings will be debited, purchases will also be debited, and suspense is going to be credited by 10,000. After correcting these errors, the balance on the suspense account was eliminated. What was the revised profit for the year? The profit will be reduced by how much? The first entry won't affect profit. The second entry, discount allowed, have been debited to discount received account. So discount received is going to be credit, and discount allowed is going to be debited. So net effect on profit will be 0. Motor expense of 4,000 have been debited to purchase account. The purchases credit and motor expense debit. Again, but payment of purchase of 5,000 had been correctly entered in the cash book, but credited to drawings account. So drawings, always remember, drawings won't affect the profit, right? So drawings are going to be debited. Purchases are going to be debited. and suspense is going to be credited. So profit will decrease by 5,000 because of purchases. So 80,000 is going to be the answer. C is the answer for this. C is the answer for this. Purchases, drawings to suspense. So drawings will not affect profit. Purchases will affect profit. And purchases are increasing. So that will decrease profit by 5,000. So 80,000 is the answer. Amit compared his bank statement with his cash book. How does Amit deal with the items revealed by this comparison? Updating his cash book, bank charges, yes. Timing differences and bank errors, yes. Bank charges and bank errors, no. Timing differences, yes. Timing differences and bank errors, no. Bank charges, no. Timing differences, no. Bank charges and bank errors, no. So B is the answer. Oh, sorry, A is the answer. Bank charges, because bank charges is a payment which will be recorded in the cash book on the credit side, and timing difference not presented, not credited checks and bank errors will come on the bank reconciliation statement. So A is the answer. The bank statement of a business shows a credit balance of $1570 at 31st December. The following differences were discovered on comparing the cash book with the bank statement. Unpresented check 1250, uncredited bankings 1800. A direct debit of $230 was shown as $320 in the cash book. What is the updated cash book balance at 31st December? So, credit balance of bank statement is given. So, credit balance means that not presented checks will be subtracted and not credited checks will be added. And the direct debit of 230 was shown as 320 in the cash book. That will not affect. What is the updated cash book balance at 31st December? That will not affect the bank reconciliation statement. So 1570 minus 1250 or plus 1800, you will get the answer. Yes, exactly. 2120, D is the answer. 1570 minus 1250 plus 1800. Direct debit error is in the cash book. So we are not correcting the cash book. What are the benefits of preparing a sale ledger control account? Detecting errors of original entry, helping reduce the possibility of fraud, providing total of trade receivable for including the financial statement. So A answer, 1, 2, and 3. Both 1, 2, and 3, I think, is the answer. I think 1 is not the answer because detecting errors of original entry, that will not the purpose benefits of sale ledger control account. We are just going to reconcile the difference between ledger balance and control account. That would be, it's a double check on the sales ledger balances. Original entry error will not be possible. Yes, 2 and 3, D is the answer. The company prepared the purchase ledger control account which shows a balance of 15960. The following items were then discovered. Discount received of 450 had been entered into the purchase ledger control account as 540. Always remember, discount received is an income and purchase ledger control account is supposed to be debited. So it is supposed to be debited by 450, but you have written it as 540. So 90, it has been debited more by 90. So you have to give a credit to the control account. Will be credited, yani you will add it in the control account. Then payment of 722 as supplier had not been entered in his account. Payment will decrease, trade payable, it will be debited. So 720 will be subtracted. 90 will be added and 720 will be subtracted. Purchase ledger debit balance carried down, total 110 had been omitted from the control account. That will also be subtracted because it's a purchase ledger debit balance. Debit balance carried down. So debit balance carried down means that it will be written on the credit side and it will come on the debit side. So we have to subtract the debit balance carried down. A contra of 170 had been entered in the purchase ledger, but not in the purchase ledger control account. That will also be subtracted. 170 will also be subtracted. So what is the corrected total of the trade payables? See, 15960. 15960 plus 90 plus 90. Why plus? Because trade payable should have been debited by 450, but we have debit it by 540. So we have to give a credit of 90, which will add actually. Then minus 720, the payment of trade payables. Then purchase ledger double balance of 110 will also be subtracted because it will reduce the trade payables, and contra will also be subtracted because it will also reduce the trade payables, because contra will come on the credit side of sale ledger control account and debit side of purchase ledger control account. So answer is 15050. Next is Deepak provided the following information: allowance for irrecoverable debts, that is end of year 1, rate of allowance 3%, end of year 2 800 5%. By how much did the total of trade receivables change from the end of year 1 to the end of year 2? So 3% is equal to 6% of trade receivable. Obviously 3% is equal to 6% of trade. 600 is equal to 3% of trade receivable. 600 amount of provision, which is 600, is equal to 3% of trade receivable. So trade receivable is equal to 600 divided by 0.03, that is 20,000, right? And 800 is equal to 5% of trade receivable. So trade receivable will be 800 divided by 0.05. That is going to be 16,000. So there will be decrease of provision by 4,000, or decrease of trade receivables by 4,000. So trade receivable has been decreased by 4,000 because the trade receivable was 20,000 at the start of year 1, at the end of year 1. That is by 600, 20,000 into 3%, 600, and 16,000 into 5%. That is 800. So trade receivables has been decreased by 4,000. A sole trader began a business on 1st January with 50,000 capital. During the year, she introduced to the business his own private vehicle, which had cost 22,000, but which was valued at 16,000 when she added it into the business. Drawings for the year were 20,000. At the end of his financial year, the closing balance on the capital account was 1,05,000. The same question which Fareed you used to ask me, that has already come in your paper. So you will basically, you have taken it into the business with a value of 16,000, right? It has cost you for 22,000, but whatever be the market value, current market value, or whatever the amount it has been introduced with that amount in the business, that is 16,000. So ending capital 1,05,000 plus drawings 20,000 minus opening capital 50,000 and minus additional capital 16,000, you will get the answer for the profit. Closing capital plus drawings minus opening capital minus additional capital, you will get the answer, that is C, 59,000. Which provision of the Partnership Act 1890 applies when there is no partnership agreement? Partner receive 5% interest per annum on their capital contribution? No. Partners are charged 5% per annum on their drawings? No. Partner receive interest of 5% per annum on loan to the partnership? Yes. And partners are entitled to equal amount of salary? No. So C is the answer, that partners receive interest of 5% on loan to the partnership. Others will not be a part of the Partnership Act 1890 when there is no partnership agreement. A partnership provided the following information for the year: gross profit, operating expenses, bank interest, interest on partner's loan, interest on capital, interest on drawing. What was the profit and the residual profit to be shared? What is the profit and the residual profit shared by the partners? So how you're going to find profit? Gross profit minus operating expenses and minus bank interest and minus interest on partner's loan. Partner's loan will also be subtracted in the income statement. So the amount is going to be 44,100. Profit for the year is 44,100. And residual profit will be 44,100 plus 2,000. Interest on drawing minus interest on capital 5,600. So that is 40,500. So A is the answer, 44,100 and 40,500. Why is a statement of changes in equity prepared? To calculate profit when incomplete records have been kept, to match the dividend paid to profit for the year, to show that changes in capital employed, to show the movement in the shareholder stake in the business. So D is the answer. It shows the movement of shareholder stake. It shows the movement in equity actually. And equity is the shareholder's stake in the business. The trial balance of a company at 31st December at the end of year 1 included the following amounts. Ordinary share capital 0.5 per shares, $0.5 shares. So 8 lakh divided by 0.5, you will get the amount of number of shares, that is going to be 16 lakh. Share premium 2 lakh, retained earning 10 lakh. On 1st January in year 2, the company made a right issue of 4 lakh shares at a premium of 0.7 per share. This was fully taken up. On 1st July in year 2, the company issued bonus share at the rate of 1 new share for every 4 held. The policy is to maintain reserve in the most flexible form. What is the balance on the share premium account after these transactions? So let's do it. Let's go do some calculation. Made a right issue of 4 lakh shares at a premium of 0.7. So it means that 4 lakh shares, there were already 16 lakh shares previously, and 4 lakh shares have or more right shares have been issued. So the total shares 20 lakh. And share premium will increase by how much? 4 lakh multiplied by 0.2, because 0.5 is the share capital. So that is going to be 80,000. So now the share premium is going to be 2,80,000 at this situation. Now, 1st July, the company issued bonus share at the rate of 1 new share for every 4 held. So the total shares are 20 lakh divided by 4 into 1. So that is going to be 5 lakh. Now this amount, from where we are going to get this amount? We have to use the, just a minute, 5 lakh are the number of shares and the per share value is 0.5. So the amount of bonus share is 2,50,000. So 2,50,000 we will take out for the issue of bonus shares out of share premium, right? And then you will get the remaining share premium. 5 lakh into 0.5. I think that will be 5 lakh into 0.5 is going to be, so 2,30,000 is going to be the answer. Uh, 25,000. No. What error we have done actually? 20 lakh, 8 lakh, 16, 4 lakh shares. 80,000 is fine. This is 25,000, I believe. In how A option, what error we have committed? This is 25,000. So 280 minus 25,000 will become 255,000, which is not the answer. Policy is to maintain the reserve in the most flexible form. So we will issue obviously. Acha, 80,000 premium. Okay. Just a minute. Okay. So the premium is basically 0.7. That is not 0.2. So 4 lakh into 0.7. That is going to be 2,80,000. So 2,80,000. Okay. And we will add it, that is 4,80,000. And then we will subtract 2,50,000 out of this to get the remaining premium will be 230,000, which is written over here. So that's fine now. Jim is a manager in a limited company. He also owns a few of its shares. Why has he been looking at its most recent financial statement? To discover the profit made by his department, as he might receive a bonus. To find out the company made a profit, making his job more secure. To know if dividend will increase over the next 5 years, improving his income. To see if the company has a good reputation, increasing the value of his share. तो सिंपल है ये तो. The answer will be D, yes. To see if the company has a good reputation, increasing the value of his share. Because his own shares will also be increased and reputation will also increase. That will increase his own benefit. Estimated cost of sales for the recent 2 years, year 2 and year 1 is as follows. Which statement regarding the efficiency of inventory turnover is correct? So cost of sales divided by average inventory, that will become 8.5, and 7,50,000 divided by average inventory 65,000. What will be the answer? Year 2 is better because the average inventory is higher. Year 2 is better because the inventory turnover in days is higher. Year 2 is worse because the cost of sales is higher. Year 2 is worse because the inventory turnover in days is higher. So you will calculate, you have to calculate the inventory turnover ratio and maybe the inventory turnover ratio in days also. It's better that you will calculate inventory turnover in days. Then the formula will be average inventory over cost of sales into number of days in a year. 1 lakh divided by 8,50,000 into number of days in a year. 65,000 over 7,50,000 into number of days in a year, which is 365. So क्या आते हैं answers, please? Inventory turnover in days के answer, can you please tell me? 1 lakh divided by 8,50,000 into number of days in a year. 8.5 and 11.5. Yes. 8.5 and this is the answer for this is the answer you are giving me for inventory turnover ratio. I'm talking about inventory turnover ratio in days because that is also important. Because year 1, year 2 is worse because the cost of sale is higher. It is 42 and 95. Okay. So this will work maybe 42 and 95. So 95, after 95 days, you are able to convert your inventory into sales. That is wrong. So year 1 is better. You can say that year 2 is worse because the inventory turnover in days. Year 2 is better because the inventory average inventory नहीं उसमें है ही नहीं. Year 2 is better because the inventory turnover in days is higher. Higher, no, that is also wrong. What is? I didn't understand what have you written. Not 90. 31. 31, 6 into not 90. 31.6 maybe. What is going to be the answer if it is wrong? 42, 42 and 31. This is what you have written. Okay. So inventory turnover ratio in year 1 is higher than the year 2. So that is fine. Year 1 is better, obviously. But if we talk about in inventory turnover ratio, again, for year 1, it is 31 days. You are able to convert your inventory into sales in 31 days.